Howdy, everybody. Welcome to Liberty Call. Today is Tuesday, July 2nd, 2024. Hope you're having a fantastical day out there in the interwebs. It's a pretty nice day here in Colorado. Got some sun. It's not too hot. It's not too cool. So it's pretty nice. So I hope you're having a nice day wherever you are in North America. All righty. So looks like the market's better mood today. We got a little bit more of a rally here. But let's take a look across the map. Unfortunately, the rest of the world, we got a little more red. So anyways, all right. Well, if it is your first time watching the Liberty Call, I'm glad you're here. Thank you very much. If you could do me a favor, yes, you in the brown shirt, give me some thumbs up, a like, a share, subscribe, a follow, and press the notification bell. Because again, you don't want to miss out on some of the smart things I say. I can't guarantee it's today, but if you tune in every day, I might say something smart once or twice a week. All right, let's get to, got something in my eye. Let's get to the indexes for the day. Dow Jones was up 0.41%, 162 points, closed at 39,331. S&P 500 up 0.65%, 35 points, closed at 5510. Nasdaq up 0.84%, closed at 18,029. The VIX down 1.88% today. It's at 1199. Canada was up 0.36, Brazil up 0.2, and Mexico down 1.77%. Over in Western Europe, Germany was down 0.75%, the UK down 0.56%, France down 0.3%, the Netherlands up 0.17%, Spain down 1.3%, Italy down 0.7%, Switzerland down 0.32%, and Portugal down 0.06%. Russian exchanges were both green today. The MOEX up 0.9%, RTSI up 0.11%, and the overnights, the Nikkei in Japan was up 1.24%. Australia down 0.42%. New Zealand down 0.31%. In China, the Shanghai was up 0.08%. Shenzhen Component down 0.97%. China A50 up 0.78%. DJ Shanghai down 0.14%. Hang Seng up 0.29%. And the Taiwan weighted when it last closed on the 1st was up 0.11%. All right, so those are the markets for today. Exciting stuff, I know. All right, let's get to today's market recap, see what happened in the world of stocks. U.S. stocks rise as Powell highlights inflation progress and Tesla jumps. All right, U.S. stocks are mostly higher on Tuesday, buoyed by Federal Reserve Chairman Jerome Powell. Powell's remarks on inflation progress, which fueled hopes for future rate cuts. Powell acknowledged significant progress in reducing inflation, but emphasized the need for more confidence in a sustained downward path before initiating rate cuts. This bolstered traders' expectations of a rate cut in September to 64%, up from 61% last week, according to Investing.com's Fed Rate Monitor tool. Now, what I would, if I can step away from the article here, everyone has been just jumping up and down, praying and hoping that the Fed will lower rates at some point. They've been talking about this really since they started raising rates 2 years ago. And I mean, first of all, what progress have we made on inflation? I mean, yeah, it was up at 9. Now it's like around 3.3%, coming bouncing around in the low 3s for a number of months now. And also they've been talking about raising the target up to 4. So boom, hey, they've already solved their problem. So again, first of all, what progress have you made? I mean, we haven't seen any deflation other than energy costs late last year, early part of this year. We saw some deflation there, but everywhere else, food, energy, everywhere else, I haven't really seen it. So. All right, jumping back in, the market is also anticipating the minutes of the Fed's June meeting and key labor market data, including the non-farm payrolls report on Friday. The May job openings and labor turnover survey report showed vacancies increasing to 8.14 million, surpassing economists' forecasts of 7.96 million. Despite high inflation and interest rates, the labor market remains strong, which is a critical factor for the Fed in deciding on interest rate cuts. Tesla saw a 9% rise in its stock after reporting better than expected Q2 deliveries of 443,956 EVs, beating estimates of 438,019. Wedbush Securities describes the Q2 deliveries as a significant comeback for Tesla, with positive implications for its upcoming Q2 results on July 23rd and its Robotaxi Day event on August 8th. Paramount Global rose over 5% following a new New York Times report that billionaire Barry Diller is considering a bid for the company. This news coincided with reports of a potential streaming partnership between Warner Brothers Discovery and Paramount Global. Boeing fell nearly 1% after the Associated Press reported that the U.S. Department of Justice is awaiting the company's acceptance of a plea deal to settle felony fraud charges related to 2 fatal 737 MAX plane crashes. Polestar Automotive dropped more than 4% after reporting first quarter operating loss. And overall, the market's positive movement reflects optimism about the Fed's potential rate cuts, strong labor market data, and significant corporate developments. However, investors remain cautious, awaiting further economic indicators and corporate earnings reports to gauge the market's direction. All right, so that's what's going on there. Let's dive a little deeper into the jobs numbers. Job openings unexpectedly surged, driven entirely by government jobs. Awesome news, folks, because government jobs really help the economy. No, they don't. They're a giant strain. In May, the U.S. Department of Labor reported a surprising spike in job openings, which rose by 221,000 to 8.14 million, surpassing the estimated 7.95 million. This came after 2 months of significant declines. The April figure was revised downward from 8.059 million to 7.919 million. The 194,000 beat of estimates was the largest since last August, but this was largely due to downward revision of the previous month. A deeper analysis reveals that the increase in job openings was primarily driven by government jobs, which accounted for 179,000 of the total increase. So 221 minus 179 is about 42,000. So 42,000 out of the 221,000 were private sector. That's not a good situation. Government job openings nearing record highs are seen as less economically productive. They're not economically productive at all, because you got to rob me to pay the government schmuck who's collecting a paycheck. Let's see. Compared to private sector jobs, conversely, private job openings remained at 3-year low of 7.055 million. Overall, the data shows a disparity between the number of job openings and unemployed workers. In May, there were 1.5 million more job openings and unemployed workers, a slight increase from April, but the second lowest since the summer of 21. The ratio of job openings to unemployed workers fell to 1.24 in April, the lowest since June of 21, and has now returned to pre-COVID levels. The number of quits, an indicator of job market strength, showed modest increases in April and May, rising 43,000 and 7,000 respectively. However, quits remain at multi-year lows, indicating that workers are less confident about finding better paying jobs. Meanwhile, the number of hires increased by 141,000 to 5.746 million, the highest since February. Despite these figures, the reliability of the data is in question due to low response rates to the job openings and labor turnover survey, which stands at around 33%. That means approximately 70% of job openings data is estimated. So this is mostly BS. Casting doubt on its accuracy. The surge in government job openings, seen as less beneficial to economic growth, coupled with declining private sector job openings, raises concerns about the true strength of the job market. The report suggests that while the number of job openings is high, the quality and economic impact of these jobs are questionable, reflecting broader issues in the current economic climate, or current economic climate. All right. So the jobs numbers are as real as I guess they're as real as Joe Biden's cognitive ability, but boy, he's a mess. All right. Let's jump into the last article here, also from Zero Hedge. This one is Financial System Plumbing Starts to Show Signs of Stress Again. All right. So let's see what this says. The Federal Reserve reverse repo facility usage has dropped by $220 billion in the last 2 days, reflecting a pullback in demand typically seen at month and quarter end periods. However, this reduction is smaller than the $313 billion drop observed at the end of 2023, indicating that banks are retaining more liquidity than usual. The financial system's stress is becoming apparent as the secured overnight financing rate, the SOFR, surged to an all-time high of 5.4% on July 1st. This increase was driven by significant Treasury auction settlements and primary dealer balance sheet constraints, limiting lending capacity. The Fed's ongoing quantitative tightening, although at a slower pace, is exacerbating volatility in the financial system, reminiscent of last year's stress during crucial quarter-end funding periods. The recent spike in SOFR reflects underlying issues, including a high volume of government debt sales necessitating repo market financing. Banks typically reduce repo activity at the end of the quarter to bolster balance sheets for regulatory purposes, leading to increased costs for borrowers. This situation suggests a persistent, if not escalating, stress in the financial system's plumbing. Indicators from 2018 to the 2019 strain, such as dealer holdings of Treasuries near all-time highs and rising overnight repo rates are reappearing. The Fed's standing repo facility has capped repo rates, but questions remain about the efficacy during stress periods. Small banks nearing reserve constraints might have to rely more on the discount window if the situation worsens. The Fed may be compelled to cut rates to revert to quantitative easing, though such actions could appear politically motivated given President Biden's declining poll numbers. Experts like Gennady Goldberg of TD Securities argue that halting QT alone may not improve the financial environment significantly as the cost of cash is rising while liquidity transactions tend to a more normal level. Despite the concerns, some like Subhadra Rajappa of Societe Generale suggest this might be a new normal, attributing the stress to a record coupon issuance sizes and high primary dealer holdings. As the repo market adjusts, monitoring reverse repo usage and the SOFR spread will be crucial for identifying further signs of financial system deterioration. All right, so the market seems to be looking okay. The jobs numbers are as, real as, I mean, when 70% of the numbers are estimated, I mean, you got to kind of just say, well, is this real or not? And then finally, the financial system is starting to show signs of, instability again. So these are all fantastic signs for the future of America. Anyways, all right. Well, that's everything that I had for today. So if anyone needs anything from me, please go to DSAFinancialGroup.com. All my contact information's there. So if you need to get your financial crap together so you don't get kicked in the balls when things get sideways again, give me a call or shoot me an email. I'll be happy to help you get your finances back in order. So again, hope everyone has a wonderful evening, and I shall talk to you again next time. Adios.